What's going on? Welcome back to the channel. Today I want to talk to you about ARM. Just had their Q4 earnings. I want to go over some of the absolute key takeaways that you need to be aware of coming from an investor standpoint, and as well what the current data points are saying, and just generally some support and resistance points that you need to be aware of. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So it did close at 173 and change. It did go down roughly 6.29%. So kind of erasing today's gains. Nothing really substantial. Did come in line with expectations for the most part because the implied move was going to be 8.84% in either direction. So kind of staying within those parameters. But aside from that though, for the key metrics, it did beat on both earnings per share as well as revenue. So earnings per share came in at 39 cents, beating expectations of 34. Revenue 983, beating the expectations of 948 million. Shorts though, I like to analyze what they obviously do leading into earnings, their expectations. And they did increase 2,000 shares, so very small amount. And even since December, they've been relatively flat. So kind of signals that they didn't really know what was going to happen with their earnings, whether it was going to be a beat, 50-50 for the most part likelihood. It is somewhat heavily shorted for a large cap stock, so 10.01% of the free float is being shorted. Definitely not a squeeze play, but it goes to show that there might be more involvement on a day-to-day basis coming from shorts, so there might be some influence for that. But 12.64 million shares overall are being shorted. Moving over to options, you did have a lot. So there was a grand total of 101 million in calls, 59 million in puts. 49% of all the options being done were optimistic in nature. And so you can kind of see today there was a grand total of 160 million in total premiums, 31 the day prior, 31 the day after that. And you did have a fairly good put slash call ratio, so a lot of optimism all in all. But of the call options, you did see a consensus for it to be roughly around that kind of 190 to 195 range. And then the bears were anticipating for it to be sub roughly about 160. So kind of came smack dab in the middle with it at 162 after hours. It is trading between these 2 points, so the R1 and the pivot. 155 is going to be a very key support that you'll really want to watch for it to hold. So that's going to be 155.81, the pivot. And then aside from that, you have 133. So I don't see that being touched whatsoever, but it does signal more so if it does break below this 155, how far it could potentially fall back. Flip side, 177, then 191. I don't anticipate either of those to be touched, only because of what was stated for the future guidance and stuff. So definitely stay tuned for that. So there was 2 ratings that did come out after hours. So one was a buy. Actually, to be honest, they were both buys, both $180 price targets. One was Rosenblatt Hans, who has a 69% success rating. Then 𝗪𝗧𝗪, who has a 46% success rating. As a consensus, $162.36 does represent a roughly about 6% downside. And I feel like that is encumbering the old target. So pretty much where it is after hours. So again, maybe there might be new ratings that does come out. It's been a while since I think ARM definitely did gain some popularity in like November-ish, and this is where you see a lot of ratings, but since then there hasn't been all that much. So low end you have $100 and high end is 180. So the ones that just came out were kind of in line with that. So let me know your viewpoint on all of that fun stuff. Give yourself a shout out if you own it, if you did options on it, or if you plan on buying it, and everything that you need to kind of know. So with all that, I'm going to play this. Like I said, this is the absolute key takeaways from their earnings that you need to be aware of. So with that, appreciate all of you guys watching.
ARM Holdings projects Q4 revenue growth of 32%, driven by strong AI demand. Earnings call insights ARM Holdings Q3 2025 management view. CEO 𝗪𝗧𝗛 highlighted that AI demand is driving strong momentum across ARM's ecosystem, resulting in record total revenue and royalty revenue for Q3 2025. He noted that total revenue grew 19% year-on-year, exceeding the high end of guidance, while royalty revenue increased 23% year-on-year. Haas pointed to adoption of ARM v9 and CSS technologies as key growth drivers across end markets, including smartphones, data centers, and IoT. He cited MediaTek's Dimensity 9400 SoC and flagship smartphones from Oppo and Vivo as examples of successful product deployment. ARM is also gaining market share in the data center with deployments such as AWS Graviton, Microsoft Cobalt, Google Axion, and NVIDIA's Grace chips. AWS reported that over 50% of its new CPU capacity installed in the past 2 years utilizes Graviton. CFO Jason Child reported total revenue of $983 million for Q3, above guidance, with royalty revenue reaching $580 million and licensing revenue at $403 million. He noted strong adoption of ARMv9 and CSS technologies across multiple sectors. Child outlined plans to increase investments in R&D, with non-GAAP operating expenses for Q3 at $522 million, aligning with expectations. Outlook. ARM provided Q4 revenue guidance of $1.175 to $1.275 billion, implying year-on-year growth of 32% at the midpoint. The revenue guidance range was kept wider due to timing uncertainties around large licensing deals. For fiscal year 2025, ARM increased its revenue guidance midpoint to approximately $4 billion, representing 24% year-on-year growth. The company expects full-year royalty revenue growth in the high teens and license revenue growth around 30% year-on-year. Non-GAAP EPS guidance for Q4 is set between 48 cents and 56, with full-year EPS expected to range from $1.56 to $1.64. Financial results. Adjusted EPS for Q3 came in at 34, matching analyst estimates. Revenue of $983 million exceeded the consensus estimate of $948 million. Licensing revenue grew 14% year-on-year, driven by demand for AI and CSS technologies. Annualized contract value ACV grew 9% year-on-year, reflecting stable demand for ARM's licensing agreements. Royalty revenue benefited from strong growth in smartphones and data centers. Initial shipments of CSS-based chips contributed to the record royalty revenue of $580 million. Non-GAAP operating profit reached $442 million, supported by robust revenue performance and disciplined expense management. Q&A. Lee Simpson, Morgan Stanley, asked about opportunities from Stargate and Crystal Intelligence projects. CEO René Haas explained that ARM is positioned as the CPU of choice for Stargate and highlighted the potential for AI workloads across ARM's compute platform. Joseph Quattrochi, Wells Fargo, inquired about the ramp-up of CSS contributions to royalty revenues. CFO Jason Child noted that royalty revenues from CSS-based chips are gaining momentum, with significant contributions expected in future quarters. Charles Shi, Needham & Company, raised concerns about ARMv9's flat contribution to total royalties. Child attributed the stagnation to strong growth in older generation products, but emphasized that V9 adoption remains on track to reach 60%, 70% of total royalties over time. Vijay Rakesh, Mizuho asked about AWS Graviton adoption and related party revenues. Haas highlighted AWS's strong adoption of Graviton and noted that related party revenues, primarily from ARM China, were stable. Sentiment analysis. Analysts displayed optimism about ARM's AI-driven opportunities, but expressed concerns over the timing of CSS and ARMv9 adoption. Questions on revenue mix and licensing momentum reflected cautious optimism. Management maintained a confident tone during prepared remarks, emphasizing record growth and strategic advancements. In the Q&A, responses were detailed but occasionally cautious regarding project timelines. Compared to the previous quarter, management's tone remained consistent, while analysts raised more forward-looking questions, reflecting heightened interest in long-term growth drivers. Quarter-over-quarter comparison. Revenue grew significantly quarter-over-quarter, from $844 million in Q2 to $983 million in Q3, driven by record royalty revenue and strong licensing performance. Guidance for fiscal year 2025 was raised, with the midpoint of revenue guidance increasing from $3.8 billion to $4.1 billion to approximately $4 billion. Analysts' focus shifted from smartphone-related growth to broader AI and data center opportunities, particularly around CSS adoption and AI-related partnerships. Management's tone remained confident, emphasizing consistent execution and strategic progress. Risks and concerns. Timing uncertainties around large licensing deals could impact short-term revenue recognition. Stagnation in ARMv9's contribution to royalties raises questions about adoption rates in certain markets. Analysts question the potential impact of competitive pressures and macroeconomic conditions on long-term growth. Final takeaway: ARM Holdings delivered a record Q3 with strong revenue and royalty growth, driven by AI demand and adoption of ARM v9 and CSS technologies. The company raised its full-year revenue guidance and outlined robust growth projections for Q4, supported by investments in R&D and strategic partnerships. While analysts sought clarity on CSS adoption and ARM v9 contributions, management remained confident in its long-term growth trajectory and leadership in AI and compute ecosystems.